Welcome back to the Deep Dive. Today we're looking at a story that, if you pitched this as a movie script just a few years ago, nobody would have bought it. It's just too unbelievable.
It really is. It's a case study in resilience. Or maybe just sheer stubbornness.
Absolutely, because if we were sitting here in, say, 2021, 2022, and the topic was Ripple, the entire conversation would have been about survival.
Oh, completely. It would have been subpoenas, lawyers, the SEC.
Is this company going to be legislated out of existence? It was a fight for their life.
It was an existential threat, plain and simple. They were in the trenches.
Okay, fast forward to today. It is January 18th, 2026. And the script hasn't just flipped. It feels like it's in a different language. They aren't just surviving.
No.
We have a stack of documents here. Government approvals, merger reports, transcripts that suggest they're effectively becoming a bank.
That is the headline. They've gone from being the rebel of the crypto world to systematically buying up the plumbing of the traditional financial system.
So here is the mission for this deep dive. We are not going to sit here and guess where the price of the XRP token is going next week.
No price predictions here.
If you want that, there are plenty of forums for it. Our goal is to unpack how a crypto company navigates the U.S. regulatory maze to become a federally chartered financial giant.
And we have quite the paper trail to follow.
We do. We've got transcripts from CEO Brad Garlinghouse at the Ripple Swell Conference in New York from late 2025. We have some incredible angry letters from community bankers who tried to stop this.
Very angry letters.
And then we have the official approval documents from the U.S. government. And because we want to be thorough, we even have a dense mathematical paper on stochastic dynamics that actually explains the logic behind their strategy.
And that paper, it's heavy reading, I'll admit, but it honestly holds the key to understanding why they're doing what they're doing.
Okay, let's start with the vibe shift. We've got this interview with Brad Garlinghouse. It's late 2025. He's in New York City. What's the mood in that room?
Vindicated. That is really the only word for it. He's joking about the lawsuit. He mentions a multi-billion-dollar number for the legal battle that felt, absurd at the time. Now he's just brushing it off.
Right.
But the most important part of that interview isn't the victory lap. It's his assessment of the regulatory environment.
He threw out a statistic that it stopped me in my tracks. He said 22% of global GDP just flip-flopped.
It's a massive number. He's talking specifically about the United States changing its stance on crypto. He points out that just 1 year prior, around election week 2024, Ripple was still fighting the SEC appeal.
And the environment was, in his words, pretty darn hostile.
Pretty darn hostile. And now he's calling it pretty darn friendly.
What I found interesting is that he was very careful to keep it neutral. It wasn't a partisan speech.
Right. He explicitly says that, regardless of your thoughts on Trump or specific policy sides, the objective reality was that U.S. leadership in crypto was lagging. The biggest exchanges were offshore.
The innovation was leaving.
Exactly. But with legislative priorities shifting, companies like Ripple were finally able to rebuild, at home.
He used an analogy that I think frames this perfectly. He compared this moment in crypto to the dot-com boom and bust.
It's the classic maturity curve, yeah.
He talks about the ICO and NFT craze of the early 2020s as being the equivalent of that late 90s exuberance. Remember Pets.com?
Oh, the sock puppet.
No.
Buying dog food online, great idea, terrible execution, just burn through cash.
And Garlinghouse brings up Chewy.com.
Yeah.
He says Chewy is basically the exact same idea as Pets.com. But Chewy is a massive success.
Why? Better infrastructure, better capital, better timing.
Right. And he views Ripple as the Chewy or the Amazon of this cycle. The hype is dead, the weak hands have been washed out, and now the real companies are building the infrastructure.
And that is the critical distinction. Amazon almost went bust. Yahoo suffered. But the companies that survived that crash weren't the ones selling hype. They were the ones building the rails that the internet runs on.
So Garlinghouse is pivoting Ripple from being, a coin company to an infrastructure company.
It's the move.
But building those rails, that involves getting permission. You can't just code your way into the federal banking system. Which brings us to the most dramatic document in our stack, the fight for the bank charter.
This is where the rubber meets the road, because you can innovate all you want in a sandbox, but if you want to be a bank in the United States, you need a charter. And getting one as a crypto firm, that has historically been impossible.
So we found a letter. It's from the Independent Community Bankers of America, the ICBA, and it's dated August 4, 2025. And this was not a polite welcome to the neighborhood note.
No, it was essentially a declaration of war. You have to understand, the ICBA's entire job is to protect community banks. They looked at Ripple applying for a charter, and they just saw a massive threat.
So what was their specific argument? Why were they so scared of Ripple?
Their main concern was Ripple's stablecoin, the RLUSD. And their argument was technical, but it was really sharp. They said, look, Ripple is letting people put money in and get a token out. That functions like a deposit.
Okay.
But, they said, it doesn't have FDIC insurance.
So they saw it as a loophole.
Exactly. Regulatory arbitrage. They were terrified that Ripple would just drain deposits from real community banks because Ripple could offer yields or rewards that a traditional, heavily regulated bank just can't match.
An unfair playing field.
That's what they claimed.
Yeah.
But they didn't just stick to policy arguments, did they?
No, they got personal.
They absolutely brought the receipts. They dug up that $700,000 FinCEN penalty from way back in 2015.
Right.
They brought up the $125 million civil penalty from the SEC lawsuit, which, you know, we should remember was reduced from $2 billion. But $125 million is still a big number.
It's not a parking ticket.
No. They basically argued, look at this rap sheet. This company has a pattern of reckless behavior. You cannot give them the keys to the national banking system.
It was a scathing letter. I mean, if I were a regulator reading that, I'd be hesitant.
Yeah.
But it didn't work.
It did not.
Because we also have the decision letter from the Office of the Comptroller of the Currency, the OCC, dated December 12, 2025. And they granted preliminary conditional approval for Ripple National Trust Bank. We need to pause here. National Trust Bank. What does that actually mean? Can I walk into a Ripple branch and open a checking account?
No. And this is a really, really important distinction. A National Trust Bank is not a retail bank. They cannot take deposits from you or me. They can't issue consumer loans. You're not getting a Ripple mortgage or a Ripple credit card.
So what's the point of the bank then?
It's for the institutional level. This charter is strictly for custody, settlement, and fiduciary services. It lets them hold and move money for other big institutions.
Okay, so think less like a Wells Fargo on the corner.
And more like a State Street or a BNY Mellon. It's the plumbing behind the scenes that moves the big money.
The OCC put some serious handcuffs on them, though. I saw the conditions.
Oh, absolutely. This was not a blank check. They required $11.7 million in Tier 1 capital right out of the gate.
Wow.
And they demanded Ripple hold 180 days, that's 6 months of operating expenses in liquid assets. They are not taking any chances on solvency here.
They also waived residency requirements for 5 directors, which I thought was an interesting little detail.
It just shows the global nature of the business. They've got directors like Jack McDonald and David Puth listed. These are heavy hitters. But the big takeaway is that Ripple is now a regulated federal institution.
They have the stamp of approval.
They're not just a software company anymore. They are inside the walls of the banking system.
Which explains the shopping spree.
Exactly. Once you have the license, you need the tools to actually operate.
Okay, let's talk about that. Buying the plumbing.
Yeah.
Garlinghouse describes their strategy as being the bridge between traditional finance and decentralized finance. But when I look at these M&A reports, it just looks like a classic corporate rollout.
It is. They're buying the components they need to own the entire financial stack. They realized they couldn't build it all from scratch fast enough, so they just bought the best-in-class solutions that were already out there.
Let's run through the list, because when you see them together, the strategy becomes really, really obvious. First up, Medico.
This was the big swing. May 2023. $250 million. $250 million. And Medico is a Swiss custody firm.
Okay, explain custody to me like I'm 5. Why pay that much for what's basically a digital wallet?
Because if you're a bank like BNP Paribas or Citi, and both of them are Medico clients, you can't just keep your crypto on a USB stick in a drawer.
Right.
You need military-grade security. You need governance protocols. You need to know that if the building burns down, the assets are safe. Medico builds the digital vaults for banks. So by buying Medico, Ripple bought the vault. Okay, they own the vault. Next, they bought Hidden Road, which they rebranded to Ripple Prime. That's the brokerage arm. Hidden Road clears billions of dollars. I think Garlinghouse mentioned $3 trillion in transaction volume. This gives Ripple the ability to execute massive trades for institutions without moving the market.
So if a bank wants to buy $500 million in Bitcoin or XRP?
They go through a prime broker. And now Ripple owns that broker.
Then came Rail, acquired August 7, 2025, for $200 million.
Rail gives them the pipes. It's a payment platform. It has Canadian registrations, connections to over 12 banks. It's what lets them move fiat currency and stablecoins in and out of the traditional banking system seamlessly. It connects the crypto world to the bank account world.
And finally, the acquisition that seemed the most boring, but I have a feeling you're going to tell me is actually critical. G-Treasury.
It is boring, and that's why it's brilliant. G-Treasury is software for corporate treasurers. It's what big companies use to manage their cash. Garlinghouse pointed out that this gives them direct access to corporate treasuries managing, his words, trillions of dollars of dormant cash.
I see the picture now. They have the vault, which is Medaco, the broker, Hidden Road, the pipes, Rail, and the user interface for corporate cash, G-Treasury.
And they wrapped it all inside a shiny new bank charter.
It's a full stack.
Precisely. They aren't just trying to get you to use XRP. They're building a full-stack financial institution to run the back end of the global economy. They want to be the infrastructure that other banks run on.
But this raises the elephant in the room. And this is the part that just tears the crypto community apart. If Ripple is launching a stablecoin RLUSD, and they're using all these traditional banking tools, does the XRP token actually matter anymore?
This is the core debate. We looked at a thread on RXRP where this exact fight was happening. It's the Reddit versus CEO showdown.
And it gets heated. You have one side saying transaction speed is 5 seconds, so volatility doesn't matter, the price doesn't have time to change.
Right.
And the other side is shouting, no, the price needs to be high for liquidity.
The liquidity argument is the stronger one, economically speaking. I mean, imagine you want to send $50 million from New York to Tokyo. You can't do that if the entire market cap of the coin is small, or if the order book is thin. You'd cause slippage.
The price would crash just because you tried to sell that much.
Exactly. You need a deep, valuable pool of assets to absorb a trade that big.
Garlinghouse admits he dodges questions about price, but he did confirm that tight spreads mean better pricing, which implies you need high liquidity.
He did. But here is where we have to look at that academic paper we mentioned, Stochastic Dynamics of Ripple XRP by Kiarosh Feruzzi.
I tried to read this. I started talking about jump diffusion processes, and I got flashbacks to college calculus. Help us out. What's the core insight?
Okay, let's simplify it. Most standard stock market models, they assume prices move kind of smoothly. Like a person walking down the street, maybe they speed up, maybe they slow down, but they don't teleport.
Right, it's continuous.
This paper argues that XRP and crypto in general follows a jump diffusion process. It doesn't just walk, it hits sudden potholes, or it teleports 10 feet in the air. It has jumps.
Okay, so it's volatile. We knew that.
But the math proves that this specific type of volatility harms settlement reliability. If the price jumps violently while a bank is trying to settle a transaction, the trade fails or it becomes too expensive.
So the Reddit user saying volatility doesn't matter because it's fast are.
They're mathematically wrong. Even in 5 seconds, a jump process can kill the efficiency of a trade.
So what's the solution? Does the paper say just give up on XRP?
No, and this is the fascinating part. The paper suggests a strategy called regime switching.
Regime switching. That sounds intense.
In math terms, it just means changing your behavior based on the environment. The model suggests the system should be smart enough to sort of read the weather. When the weather is calm, XRP is stable. You use XRP for the settlement. It's fast, it's cheap, it frees up capital. But when the math detects a jump regime, high volatility, the system should automatically switch to a synthetic hedge using a stablecoin.
Like RLUSD.
Exactly, or USDC, or whatever.
Wait a second. So the math perfectly matches their business strategy.
It's a bullseye. Ripple isn't launching RLUSD just to be cool or to chase a trend. They are launching it because mathematically you cannot run a reliable global settlement bank on a volatile asset alone. You need a shock absorber. RLUSD is the shock absorber.
That is a huge insight. It reframes the whole "is XRP dead" debate. They aren't replacing XRP, they're insulating it so it can actually work.
Exactly. The stablecoin protects the utility of the volatile coin. It validates the entire pivot.
All right, let's zoom out to the future then. Where does this go in 2026 and beyond? We're seeing a lot of chatter about CBDCs, central bank digital currencies.
And Ripple is deeply embedded here. According to the A-Invest report, they're working with over 20 central banks. We're talking Georgia, Palau, Bhutan.
The National Bank of Georgia selected Ripple for their digital lorry pilot. That's a government project.
And that's significant because it moves beyond speculative trading into sovereign money. If a country runs its national currency on your ledger, you aren't going anywhere.
We also saw mention of EVM compatibility. Break that down for us. Why does EVM matter?
EVM stands for Ethereum Virtual Machine. Think of it as the universal translator of the crypto world. Most DeFi apps lending, yield farming, all that stuff are written in Ethereum language. For a long time, the XRP ledger was a walled garden. It spoke its own language.
So it's isolated.
Right. By adding EVM compatibility, they are tearing down the wall. Developers can now take apps built for Ethereum and just run them on Ripple's infrastructure. It connects their bank-grade plumbing to the wild west of DeFi.
That opens up a huge ecosystem. And the numbers are looking big. As of this month, January 2026, the market cap is around $178 billion. Daily volumes are $6.6 billion. It's a giant.
It is. But Garlinghouse has a very, very long view on this. In that interview, he made a comparison to the internet's timeline.
I remember this. He said the internet took about 30 years to truly mature.
Right, from about 1997 to 2027. And he argues that since crypto was effectively born around 2010,
We're only halfway there.
he thinks we have until roughly 2038 to reach full maturity. He joked, "We got a lot of growth left."
2038, that is a long game. Most people in this space can't look past next week.
It is. But if you look at what they've built, the bank charter, the custody vaults, the brokerage, the compliance, they are clearly building for a decade out, not for the next bull run.
So let's summarize this. Ripple has essentially executed a Trojan horse strategy. While the whole world was obsessed with the price of the XRP token and the SEC drama, this company went out and built a fully regulated, federally chartered financial institution inside a crypto wrapper.
They did. They bought the infrastructure to run it, they secured the legal right to operate it, and now they're integrating it with central banks.
And here's the provocative thought I want to leave you with today. Garlinghouse explicitly stated in that interview, we are not XRP maximalists. They use XRP, sure. But they also use USDT, USDC, and now their own RLUSD.
That's a critical admission. It changes the identity of the company.
So the question for you listening is this. As Ripple becomes more like a traditional bank-safe, regulated, diversified, maybe even a little boring, does the specific value of the XRP token become less central to their business model?
It brings us back to that Amazon question. Amazon started selling books. Now they run the cloud servers for half the world with AWS. The books are still there. You can still buy them. But are they the business?
Or is the business the infrastructure?
Yeah.
Is XRP the books? Or is it the cloud? Is the Amazon of payments leaving the .com speculators behind? That is something to chew on.
It certainly is. The infrastructure might just be worth more than the asset it was built to move.
Thanks for diving deep with us. We'll catch you on the next one.